Welcome, ladies and gentlemen, to Swiss Resource Capital AG Virtual Roadshow. And it's my honor and pleasure today with LI Metal, to present to you, not I'm presenting, of course. My name is Jochen Steiger. I am the CEO and founder of Swiss Resource Capital, and also I'm the chief editor and founder of Commodity TV and Rohstoff TV. And it's my pleasure, to announce already two of our speakers here today. First of all, we have Maciej Jastrzebski, who is the CEO of LI Metal. Maciej, great to see you. Hi.
Hi, Jochen. Hi, everyone.
Hi, how are you? Hope all good. And we have also for the first time Kunal Phalpher, who is the president of the company. Hi, Kunal. Good to see you.
Good to see you as well.
Yeah, thanks for taking the time. Let me check shortly here on the attendees. Yes, people are coming in and dialing in. That is great. Before we get started, some notes from my side. Of course, we are fully complying to the data security laws of Europe, Switzerland, and also the little funny island in the North Sea, England. And I'm a shareholder of the company, and also LI Metal is part of the SRC Mining Special Situations Certificate, which was launched through us a good 3 years ago. So we like the company a lot because, as you know, we are very pro for lithium, for cobalt, for battery metals, but also we need new technologies. We need new assemblations for batteries. We need new techniques that we get more mileage, more range, and that's exactly what LI Metal wants to do and show us here in a second. So let me check on here. Yes, that's working perfectly. Okay, I will bring up the presentation, and then I would say, Kunal and Maciej, the floor is yours. One little thing, we have a chat box and we have also a Q&A box. Please use that, type your questions in. As you know, both gentlemen will present approximately 25 minutes, and then we have easily 30 minutes time for a lively Q&A, and all your questions will be answered. All right, let's get started. Maciej, Kunal, the floor is yours.
Thank you so much, Jochen. Thanks for that great introduction. So everyone, thank you for joining this afternoon. As Jochen said, my name is Maciej Jastrzebski. I'm the CEO and co-founder of LI Metal. And joining me today is Kunal Phalpher. He's our president. He joined the company late last year. And he's been looking after the corporate development and commercial and a number of other functions in the company. So it's really important as the company grows and moves to the next stage. So for those of you who are maybe not so familiar with LI Metal, we have, as the name suggests, obviously we're working in the lithium space, battery metals, and battery material space. We're fortunate to have been able to build a really great management team, which is supported by a board with lots of experience, particularly in the upstream in the lithium space. So really good support across the board. Now what we're doing is developing and commercializing technologies for next generation batteries. And so what we're specifically doing is developing technologies for converting the basic lithium salts to metallic lithium, and then transforming that metallic lithium into anode components that are ultimately critical for next generation batteries. And that's quite a broad umbrella term. It really encompasses all of the successor technologies to the lithium ion battery. So I'm talking about things like solid state batteries, lithium sulfur batteries, advanced liquid electrolyte, lithium metal batteries, and basically all of these technologies offer a step change in performance in one or more characteristics over lithium-ion batteries. And it's an evolving space, but these technologies will start to be very, very important and a key part of really the electrification revolution, especially as we get into the second half of the decade. So increasingly important, evolving, really exciting space, but one that is still sort of midway through commercialization. We're seeing some companies already commercializing, deploying their products in sort of niche applications, and many more companies, great companies, developing these technologies and starting to make their way through the auto qualification process. And just a little bit more about the background of the company. We really started developing the technologies in sort of late 2018. We were in stealth mode for a number of years as we did our sort of proof of concept work and some of the early development work. We took the company public in 2021, And that was really a great way for us to raise a substantial chunk of capital. We raised about $32 million Canadian in that go public transaction. And that's allowed us to build out the facilities, which we have been using over the last 12 plus months to really sort of supercharge the development and push the technologies towards commercialization. And maybe Kunal, why don't you take over here?
Thanks, Maciej. And before we get into our technology, maybe we want to give some background on the market we're trying to address. And so as Maciej said, our technology is looking to address a gap for next generation batteries. And what are next generation batteries? It's a wide array of whether it's solid state or lithium sulfur technologies being developed to really replace lithium ion in the future. And why do they, or why can they replace lithium ion? It's really about the three things we see on the left side. One is higher energy density. So either we could have smaller batteries in our vehicles or longer ranges. By having a smaller battery with the same range, you can actually also reduce material intensity. So you're now using less nickel and cobalt to produce the same battery. We also have higher specific energy, which is really about reducing weight. We see that this is really critical when it comes to the new mobility applications that are talked about in the air. So whether it's short haul, hybrid electric aircraft, or eVTOL taxis, both require a similar profile for the battery. And lastly, helping advanced solid state batteries gets you to a place where you don't have flammable electrolytes, which means there's an improved safety potential. So lithium metal and lithium metal anodes are all an enabler for these. Just quickly, next generation batteries also look at silicon anodes. So we put some data up here, but one of the key differences with the lithium metal anode is you can really get the mass of the battery down further with respect to, in comparison to a silicon anode. But either way, again, the point is you're getting better performance with lighter batteries with next generation. I just clicked the wrong place. So looking at our two businesses, as Maciej described, one is the focus on metal. Today, there's about 6,000 tons of metal produced globally. About 3,000 tons of it is battery grade, predominantly going into primary batteries or your small coin cells used in medical devices, etc. Most of this, 90% plus, is produced in China. There's small production in US, France, and other places, but not quite enough, as you see from the chart on the right or the number in the blue box, for what is projected to be needed for these new types of batteries. So Benchmark Mineral Intelligence is projecting, as one data source, 22,000 tons almost of lithium metal needed by 2030 to enable all these new types of batteries. And there's very little new capacity outside of China being built up for metal production. And that's the market we're trying to address, while also having the opportunity to address the other existing markets like alloys or pharma with our technology. And on the anode side, we see that a lot of the major OEMs, particularly in North America and Europe, are committing to next generation batteries, as you see from the headlines here. What's happened, I think, over the last 5 to 7 years is the major OEMs are really dependent on other people's lithium-ion technology, and so solid state or new next generation batteries allow them the opportunity to really get involved in the development of the battery technology as a replacement for their engines from the start. And so we've seen investments by the likes of BMW into solid power partnerships, or even, as it points out, Rivian really developing or planning to manufacture their own batteries. Of course, in the automotive space, there's a long lead to any vehicle production and design. And so it's a bit small, but on the chart on the bottom, you see that it's really in the later part of the decade where you'll see products on the road. But the time to get our product into the design is really in the next 18 to 24 months as companies look to establish their technology, develop their technology, and increase production slowly for the appropriate testing and certification to actually get it on the road. So while the end product, say the vehicle, won't be on the road for some time, there's a fair amount of activity in this space at the moment for development. So just to look at the existing industry, whether it's metal or anodes, they go hand in hand versus lime metal. I mentioned the domestic supply, both on metal but also on existing anodes, doesn't exist at scale in North America and Europe. And so what we're looking to do is localize that production over time in both North America and maybe eventually in Europe as well. Also, the existing process, as Maciej will describe, is to roll lithium into a foil. But for a EV application, both from a cost and performance perspective, what they really need is a very thin layer of lithium, or thin anode, which is not possible with existing anode production technologies today. So our technology allows us to produce very thin layers of metal onto a copper or other substrate, but also a lot of flexibility in thickness, width, and materials that you can replace the copper with for different applications. That process also results in a high cost. So we see that our technology will have higher throughput. Lower quantities of lithium can get the cost down on the anode side, but also on the metal side, by eliminating the use of chlorine or lithium chloride in the process, we help to eliminate a large chunk of CapEx and OpEx in the process. And scalability. So more modular, more environmentally friendly process will help us scale and deploy in jurisdictions like North America and Europe, where permitting, et cetera, does take longer, and also the byproducts you're producing have a bigger impact on that permit. So I'll pass it back to Maciej, who'll dive a little deeper into these topics.
Thanks, Kunal. So yeah, as Kunal mentioned, the supply chain is really taking shape as the qualification programs kick in. And I think the key point really to take away from that, or a key point to take away from that, is battery technology will become a significant differentiator and a significant place where the automakers need to play. And the center of gravity right now, of course, is largely in Asia. And next generation batteries are seen as a way to, or dominance in those batteries are seen as a way to recapture the initiative in sort of North America and Europe. And so we have sort of geographical gaps in the supply chain, or in this future supply chain as it's getting built out. And of course, we also have technological gaps, which points to the problems that Kunal identified there in the previous slide. So those are the two areas that Li Metal is really working to address, to have a local presence in the areas where there's a lot of work being done on next generation batteries, and ultimately where they're going to be deployed, and to build that supply chain there, but also to sort of clean sheet the processes so that they're appropriate for the specific needs of the technologies. And so if we kind of start at the beginning of the value chain there with metal, the existing technology that's used is a lithium chloride electrolysis process. And so that has two principal disadvantages. One is the feedstock is sort of a niche material. It's not produced in large quantities. And so there's no ready supply chain to deliver that material as we scale up the demand for next generation batteries. And just in the processing of it, when you split it, you produce chlorine gas. And chlorine gas is toxic. It makes permitting difficult. You need to handle it appropriately in the working environment. You need to capture it. The byproducts aren't particularly attractive. And so it adds this environmental burden through fugitive emissions and byproducts, but also adds a scale-up burden in terms of the regulatory requirements, in terms of the additional equipment that contributes to extra CapEx and OpEx. So our technology we've sort of clean sheeted and we said, okay, what would we want the technology to be able to do in order to best satisfy the needs of this next generation battery supply chain? And so one of the things really was to change the feedstock so that it would be one of the salts that's readily available. So our process, the process that we've developed and that we're scaling up, uses lithium carbonate as the feedstock. This is the basic salt, the principal salt that is used in many existing lithium-ion battery chemistries. And so by making this our feedstock, we're really able to bolt on the lithium-ion battery supply chain onto the next generation battery supply chain. The other thing it does is it eliminates the need for, it eliminates chlorine production, because of course you're starting with a different compound. So when you separate it, your off gas is different. And so we have a much more benign off gas. It's basically an oxygen enriched CO2 stream. It's you have small volumes. And so all of the issues associated with chlorine basically go away with our process. And that has the downstream impact of mitigating some of the costs associated with the chlorine. It makes it easier to permit the process. It makes it easier to locate it in closer to urban areas where fugitive emissions aren't an issue. And the way we've designed the system is really sort of in relatively small scale increments, so that we can pilot it to de-risk it almost at full scale, and so that it can be deployed incrementally, so that you can add capacity to meet the demand. So it's a really nice technology. We're very excited about it, and we're sort of going through the piloting process on that now. Taking one step downstream, where you're taking the metal and you're actually converting it to the anode material. What's really happened here, and Kunal alluded to it, is that as next generation battery technologies have been developed, they've sort of pressed unwillingly into service the technologies that are used to produce the materials for primary batteries. And this is full foil rolling process. It's fantastic for producing narrow, relatively thick foils, which are great for primary batteries, non-rechargeable lithium batteries. But they're exactly the opposite characteristics of what you want in an EV battery, which is something that's large format and very thin. And the particular characteristics of that process, they're not easily changed. They're kind of fundamental to the mechanical properties of lithium metal. And so as you try to really kind of juice that process to try to get these wider format ultra thin materials, the cost just explodes exponentially. You have huge scrap rates, and so it's just we see it as a kind of a technological dead end, as something that can't be adapted to next generation batteries. By contrast, our technology starts with physical vapor deposition, which is a process that's been around for about 70 plus years. It's the same process you use to produce low-cost packaging materials. Anything that looks metallic and is plastic, plastic film with a metallic coating, is produced using physical vapor deposition for the most part. And so it's a process that has great economics at scale. It's the sort of underlying technology is well understood. And so what we're doing is we're adapting that to high throughput production of anode material. So we're taking a substrate, we're depositing lithium metal, we start from zero and we add. So we're really in a great position to make these ultra thin anodes that are needed by next generation batteries for EVs. Because you're using a substrate, you're not limited by the mechanical properties of the lithium, so you can make things very wide. It's really a beautiful technology. And has much better economics. We're talking about very, very attractive unit economics. As you go thin, they start to approach the economics of sort of conventional graphite anodes that you use in lithium-ion batteries. So what we're really trying to do is we're trying to target the technology specifically at what we know the target battery price is going to be, so that we know that the technology will be viable in the future. Now, the other thing that's really exciting about physical vapor deposition is you've sort of paid all your costs by the time the material's in the vacuum unit and had the lithium deposited on it, but you're still in this highly controlled environment. It's very easy and inexpensive to add incremental sort of coatings, to add incremental materials to modify the anode in such a way that you can actually achieve superior electrochemical performance. You get better cycling, you get faster charging, those types of properties you can start to build into it. Things you would never dream of being able to do with foils. So we see this technology as having a huge range of applicability across all of the next generation battery technologies. We even have had some success in pre-lithiating silicon, which you wouldn't expect you would necessarily be able to do with a technique specifically designed for producing lithium metal anodes, but it's so flexible that we can actually even do that. So that really expands the range of technologies we can target with this one technology platform, which is fantastic. So Kunal, maybe you can take us through the strategy in the next couple of slides.
Yeah. So first, starting with the metal side, where we are today is continue to pilot and run campaigns to demonstrate that we can continuously produce metal. Maciej and the team are also starting to work with an engineering firm to study the scale up potential and cost for the technology. But the end goal is really to build out, starting in North America, a centralized plant over the coming years that produces metal at a battery grade. We can still produce also a technical grade to serve those other markets as the anode market and next generation market mature. So the market's there today, and the lack of production outside of China is also there today. So there's a huge opportunity to keep pushing forward there and build a fair sized plant to serve existing markets, and then eventually continue to feed the material to ourselves to produce anode. On the anode side, we have our demonstration, or our, let's call it, pilot plant in Rochester, New York. From there, we're able to produce samples, and I'll cover this also in the next slide, to a number of customers who then take that material, test it in their battery technology with their electrolyte, provide feedback, and we iterate from there. That's really the early stage of qualification of anode. We see that the technology we've developed and enhancements we've done to the PVD process are where our core strength lie, and also on the product development side, as Maciej talked about, different coatings and other layers. And we see that the strategy over time for deploying this technology will evolve. Right now, we're producing the material, we're shipping it to customers. Even for the next phase of their development, this may be the case, but at a certain point, when our customers are ready to build giga-scale facilities to produce batteries, this is really part of the battery production process. And we see that deploying our machines or technology at their site or next to their site and over the fence would be the appropriate model for both technical and economic reasons. And so just to build on that, we, as a public company, we've announced one major customer, Blue Solutions, subsidiary of Bolloré. They are the first commercial manufacturer really of, or largest, let's call it, solid state lithium metal batteries. They currently use the existing rolled foil technology in their, what they call, third generation battery. And what they want to move to in their fourth generation is a ultra thin anode. And that's where we're working with them. Their batteries are already in Daimler electric buses. And so they have a position in the market on the commercial vehicles, but their fourth generation will really allow them to get into mass market EVs. Beyond that, we have a number of other ongoing discussions. These are often early stage companies or other automotive companies that are developing these technologies in the background. So we can give out the number, and basically converting from those 27 to 12 companies that are sampling and more to come. We're just working out the timelines for that. So we've gained traction. There's not a lot of groups actually capable of sending anode material, and groups are interested in continuing to iterate to develop their products with us.
Yeah, so I think I just wanted to highlight one point on this slide, which is we've really built the company to be very customer focused. All the facilities that we've built out have as their end goal to satisfy a customer need. It's why the first facility we actually built was the anode pilot facility. That is what has allowed us to continue to produce sample anode materials, to get the customer engagement, to give them the opportunity to test, and to put us as closely in touch with the customer so we can understand their evolving needs as their technology starts to approach commercialization. So I think that's been a really great strength of the company. That is a big element, that we have sort of 2 facilities, or let's call it 3 facilities across 2 locations. We have the anode pilot facility that's supported by our anode materials lab, which is located here in Toronto. There we can sort of work on the more advanced materials to do customizations, to do all of our testing. Some very, very strong capability in those areas. And of course, we have our metal piloting facility here in Toronto as well, in the same location at our head office. But basically, this is a process development space. It's, I think our piloting approach is quite unique in that we're sort of taking out as much of the technical risk as possible up front. What you see there in the picture is inside that tall refrigerator looking box, which is actually a temperature controlled oven. There's almost a full scale electrolysis unit inside of that. And so once the piloting is complete, being very methodical about it, but once the piloting is complete, then there's very little technical risk left in deploying the technology. So everything we're doing is to advance things to a point of commercial readiness as quickly as possible, and to put us in the best possible position to really catch that initial wave of commercialization of the next generation batteries. And in terms of just looking ahead and where the company is going, there's a lot of work going on in the background in piloting. There's a lot of work going on in the background in product development and sample deployment to customers. We're doing engineering studies. The process always sits in the plant. Of course, there's the core flow sheet, but there's ancillary equipment. There's impact from that on site selection, those types of things. So we're getting a head start on those items because we do want to be ready to deploy. Basically, at the moment the technology is ready to commercialize, we want to have worked out all those other details so we can really basically just move directly to funding and building the build out of a commercial facility. So it's an exciting year for us. It's going to be a lot of developments, and the team is energized to keep pushing this forward. And just to sort of summarize, I think we're unique in that we're I think one of, if not the only company specifically working in the next generation space to try to build out these winning technologies to support that now emerging supply chain. We've, as I said, we have technologies. We've sort of clean sheeted the development. We're adapting, and in some cases, developing completely new technologies to specifically address the needs and the shortcomings in that supply chain. And of course, with our piloting approach, at the point where the piloting is complete, we're really, we've taken out probably 95 or more % of the technical risk out of the technology. So we're being very thoughtful about how we approach this. I think it's a super exciting space. There's a lot of developments, every month, every year, we're seeing things moving forward. And so we're working on our end to do our part to enable that exciting transition to take place. So watch this space. There's going to be a lot of developments. If you want to join the mailing list, please do. Or if you want to join us for the rest of the journey, we're traded on the exchanges in Stuttgart, in Frankfurt, in Munich, and TradeGate, Toronto, and the OTC as well. And you'll see the symbols there listed at the bottom of the slide. So that's all we have for today, and really, really excited to have been able to speak to everyone here, and looking forward to questions.
Okay, super. Maciej, Kunal, thank you very much. Let's stop that here. Yeah, ladies and gentlemen, please use the chat function, also the Q&A only function for questions. So I give you a little bit of time. And I had already a question. The presentation is also on our website, of course, resource-capital.ch. Under the LI Metal section, you find the presentation so you can download. Yeah, so as everybody gets some time to make up his mind, I've also done some notes. I think one of the really important things is we saw patents pending. You have already patents, I guess, yeah. So the question would be, how is the patents working? And also, in addition, how high is the entry barrier for companies who want to do the same? Because it looks like a very interesting area.
Yeah, so look, our IP portfolio is always growing. We're ultimately a technology company, so we're moving quickly where we create novel inventions or novel products. We're very mindful to add them to the portfolio. This is, unlike a mature space, this is actually quite an open space in many aspects. There's aspects of it that are, let's say, on the PVD side, the technology, the platform's been around for years, but we're making new changes. We're doing new approaches. We're changing the kinds of products that are produced, and so those are things that we're seeking protection for. On the metal side, we have it's basically a new process. So again, lots of equipment, lots of just general technology patents that are possible there. I don't recall the exact number, but it's sort of like 22 plus applications that are in process. We're still a relatively young company. We've been around just over 4 years now. So some of the earlier inventions are starting to get to the end of that process, and of course we'll as those start to be granted in different jurisdictions, we'll keep everyone informed of that. In terms of barriers to entry, look, there's interest in this space, so people will find the money to eventually compete. I think we're already seeing some activity in the space by some of the different players, but that's ultimately a company like ours gets its advantage from being focused on the technology, from addressing a specific need, and we've been doing that for a long time, longer than most people have been thinking about this as a problem. So I like to think we have a head start, and we have a significant technology edge in a number of areas.
Super. So you feel ready and ahead of the competition?
Yes.
Okay, good. Fantastic. So then I saw already questions from Munich and Frankfurt from investors, and I think I can wrap them a little bit together. What price was your last financing? Also, please talk a bit about the current cash situation, cash burn. We saw it by September, you had $17 million in the bank, but what's the situation today? Meaning, are you able to really go through until you can generate significant revenues? Hello? So somebody needs to answer.
I think Maciej is frozen.
Looks like, yeah.
Yeah, I can handle the. Oh, his screen went black.
He probably comes back in.
Yeah. I mean, the latest numbers we have out there in the public forum are the 17 million at the end of September. Our new results will be coming out soon. I would say that the remaining cash is not enough to get to a commercial state because there's a significant amount of engineering required. So we're looking at how to continue to capitalize the company for the future beyond just R&D state. I think for the price on last financing, I wasn't here at the time, so I don't have the number off the top of my head. So I'll turn it back to Maciej.
We've had a split, so I'd have to check my notes on that one, but I believe it's still somewhat lower than where we are today.
Okay. And there was also a question in addition, what happened with the share price? Because you guys went down from over $1.80 now to 34 cents. Any specific reasons? Was it just the market? Do you have an explanation for that?
Yeah, look, I mean, it's always fraught to comment on those kinds of things, but I think if you look at the general space, companies, any company working in any space that is more forward-looking, I think when the market conditions tighten up, those are the companies that are first affected. I think that's sort of what's happened in a lot of cases in this industry. So I'm not. There's huge value. I think that, as you can see from those slides we presented, from the commentary, there's a huge market emerging here. I think it's anode materials will be a $10 billion a year market by 2030 is the estimate. It's going to be a $40 billion a year market by 2035 for these specific anode types of anode materials. So we think there's a great opportunity here, and we think that the companies that invest and the investors that invest in the companies that are working in this space will ultimately be in a good position to reap the benefits of that.
Mm-hmm. So how long do you think it would take until you can really start to generate significant revenues? What's just a feeling? I know it's a forward-looking statement, but I think this is one of the questions every investor has. When will you start with the revenues? Because it sounds like you have a fantastic technology.
Yeah, look, I mean, it is a forward-looking statement. We're looking to be making commercial product in the next couple of years. Ultimately, to some extent, that depends on completing the technology development. It depends a bit on the market conditions. It depends a bit on the economic conditions, and ultimately on some of the customers in the space. So we're being wise with where we're making our investments. We're investing in the technology. If you look at the makeup of the company, there's the technical team makes up the vast majority of the payroll. We're very active in the commercial domain as well, and so it's always it's an impossible question to answer definitively, but our target is to, within the next couple of years, have a commercial operation deployed and running these technologies.
Yeah, I mean, it would make sense because you showed us in the presentation that the demand for the lithium metal markets is like 7 times higher over the next years. So I think
exactly.
you're in the right space.
And that's exactly right. That capacity is going to get built. We have to make sure it gets built with the right technology that has the appropriate economics, and that it gets built in the right place. And that's why we're positioning ourselves here in North America. And I think one of the great things that's happened over the last couple of years is there's been a real recognition by governments that having the new automotive supply chain in country is going to be tremendously important.
Yep.
And so there are programs and supports available for companies like ours developing new technology in the space. And so, of course, that's something that we're actively chasing right now as well. So it's I think everybody recognizes that we're under sort of it's not 2020 or 2021 anymore, and all of these all of the technology companies are under pressure, but there's still capital available to continue the development. We're very optimistic about our chances of success in terms of getting the technologies to commercial scale. And one of the great benefits of the technologies that we're developing is the sort of minimum unit of deployment is actually not enormous. So you can scale with the market and really use your capital and then start to feed the revenue and the profitability back into the business and grow organically. So there's a lot of options there. And look, it's something we're very, very conscious of. We're very conscious of the fact that investors are keen on this, and it is something that we're pursuing, and we'll be releasing some information sort of along these lines and timelines later this year, because we recognize it's an important thing. and we want to give the market the appropriate information.
Mm-hmm. Okay, there's also a question from a German investor here. How much money do you think you need to ramp up the commercialization production? As you said, you can do it phased. Yeah. Of course, an exact number is not yet really appropriate. I understand that fully. But are we talking, if I look at to build a mine, do we talk about $100 million, 500 million, or $1 billion? And how do you think this could be financed? Because I can imagine programs like the Inflation Reduction Act from Joe Biden, there would be money for you also available, right? Because you help it really definitely in those sectors which are needed.
Sure, no, absolutely. And look, these are not mines. We are not talking about billions or hundreds of millions of dollars. Obviously, scale matters. You can build up that scale eventually, but the idea here is, we expect that in some respects the company will be revalued once piloting is complete, once the technology is proven. And we expect to be raising it's not hundreds of millions of dollars to build a commercial plant. I'll say that much. I have to be relatively careful about what I say, but it's not hundreds of millions of dollars to build a commercial plant.
Okay, super. Are you able then, let's say, to build a production facility, let's say one in Canada, one in the US, one, I don't know, in Germany? You are already working with Daimler. Would that make sense?
Yeah, maybe Kunal, why don't you comment on that, because you've been giving that some thought.
I think on the metal side, I mean, U.S. and Canada, let's treat it as one region. So North America, the supply chain is pretty integrated. So the metal plant would be I would say, centralized for the region. And then again, if we look at Europe, you would want to build one plant for the region on the metal side. Whereas, as I think I was speaking to earlier, the anode facilities would be more decentralized, closer to battery production, whether that's, one anode facility for one gigafactory, or if there's a cluster industrial park where there's multiple customers, you could build a sort of mini centralized anode plant for those groups. But to your previous point, of course, this is strategic metal for both North America and Europe. So there's going to be also support available, and we have to look at, is Canada or the US, or now we're seeing also activity in Mexico, what's the best position for a lithium metal plant.
How do you see China's role in that market game? Because we know most of the batteries are coming directly from China, if it's CATL or even also South Korea. How do you see the role there? Because that would be, maybe some of them would be your natural customers in the future.
Yeah, I think on the next generation battery side, most of the activity is occurring outside of the traditional lithium-ion battery players. We've seen some announcements. You mentioned CATL; they're working on sodium-ion, but a lot of the next generation or solid-state batteries are startups or emerging companies, particularly in the US, somewhat in Europe. Will the large Korean or Chinese players eventually acquire some of these or invest in some of these? That's of course possible, but I think the likes of, say, LG have their hands full scaling up all the gigafactories that they've now promised in North America and Europe, and they're really focused on that deployment rather than the next generation.
Okay. Let's go back to your product, your lithium metal, which you can do like on a foil, you can wrap it, you can roll it on a big thing, which I think is very comfortable to transport also. Does this have to be really customized for absolutely every battery, or could you say, if we have the same specifics in an LG or in a Samsung battery or Panasonic, for example, or CATL, we can use then also the same product, meaning how fast can you react if a customer says, hey, we have a new line of new production line of batteries, we need to adjust. How does that work?
Yeah, I'll talk to that one, Kunal. So the great thing about PVD technology is you can actually, you can vary things like width, thickness pretty readily. You can vary additional sort of composition aspects quite readily. So the plants can be very, very flexible. We, as I was saying in the presentation, in our little pilot machine that we have in Rochester, which is it's sort of intermediate between the production and a development machine. We can produce material on different substrates. We can produce materials with different compositions. We can produce materials. We can, as I said, even pre-lithiate certain silicon materials, which it was not necessarily an obvious result that you could treat, a nano material with a completely different technology using the PVD process. So it's very, unless there's radical changes in format, I think what we're expecting is a great degree of flexibility in terms of the technologies that can be serviced even with one type of machine. And then there's incremental customizations you can do. You can replace one source with another kind of source, or one kind of pretreatment with another kind of pretreatment. That they're in themselves also potentially relatively quite modular. So I think we'll have to see as that market evolves what the preferred model is, but I could see deployment across a broad range of battery technologies with basically the same platform.
Okay, super. If we look at the ingredients you need to produce your final product, do you see any problems in the future to get, let's say, enough raw material, let's call it like that, really, first of all, to get it, and also at reasonable prices? Can you do contracts, let's say, to secure a certain price level to maintain margins? How does that work?
Yeah. Do you want me to take that, Maciej?
Yeah, good.
Yeah. Of course, lithium carbonate is a key input into a metal plant. We see that there's already some price pressure downwards on lithium carbonate. We won't really need large scale until a couple of years out or longer, that Maciej said, when we build the plant. So it's something we're starting to strategize now, but until we really decide where the plant is, how big that is. But to give an example, if we built a 500-ton metal plant, our total demand is really 2,500 tons of lithium carbonate, and we can use different grades of lithium carbonate, technical and battery grade. So, of course, you want to have some security of supply, but I think the flexibility would allow you to also acquire from different sources, off-spec material or lower grade material that's not going towards battery companies. And we're seeing that development of localized supply chains. So when we talk about 2025 or 2026 in North America, there should be increased production of carbonate as well, and lower prices.
Okay. Then let me see. Yeah, what is the news flow to expect for this year? Question from a fund manager in Munich.
Yeah, I mean, I can talk more to the character than the specifics, but basically, you'll watch for announcements around successful piloting, commercial agreements, government funding. Those are all signs that things are moving in the direction that we're aiming for.
Okay, super. Then, of course, a question: who owns the company? What is management share? What large shareholders? What funds do you have in? Can you give us a bit more of an idea?
Yeah, so I believe management and board and management is on the order of 25%. And we still have mostly retail holders. We have some of the early investors are in. So it's still, having not done a financing since the RTO, we don't have any significant institutional holdings in there yet.
Are there funds you are talking to? Because we know there are a lot of battery metal funds, lithium, let's call it lithium cobalt funds, whatever how you want to call that. But I could imagine there's interest out there, right?
Sure.
Because
yeah.
the stock is really too cheap, to my understanding.
No, look, we're talking to a lot of groups. We're talking to a lot of groups.
Okay.
Yeah.
Okay, super. So let me shortly look at my list here. Yeah, exactly. I think you said in the presentation that the lithium ion batteries will be replaced quite soon in that sense. Yeah. Do you have any restrictions with your technology on any battery types, or does it work with some better, with some not so good? Can you elaborate a bit on that?
Yeah, I mean, I think the time frame is, in terms of completely replaced, we're talking about, still a relatively long time frame. I think what we're going to start to see is, first of all, new niches being opened up by the extra capabilities that are afforded by next generation batteries. So Kunal touched on a number of those, eVTOL, aerospace. Probably initially we'll see them in higher performance vehicles, and then you'll have percolation of that and eventual replacement of the lithium ion batteries. Look, in terms of are there technologies that we haven't come across a customer yet that had a technology that was completely alien to what we're doing, or that couldn't in some way benefit from at least one or other aspect of what we're doing, whether that's metal supply or the specific anode product. So of course, yes, something can change, but that inevitably takes, from the moment it appears on the horizon to when it's a commercial product, always takes a long, relatively long time. And we've seen these batteries in development now for 5-10 years, and starting to be incorporated into the qualification programs for commercial products. So I think we're looking at a broad portfolio of very applicable battery technologies that are going to become more and more prevalent and starting to make up 10, 20, 30% of batteries as we get to the end of the decade. So I think that's a very exciting thing for our company, because there's sort of a lot of chances to win.
Okay, super. So as I'm checking my notes also, let me see here in the chats. Yes, we have answered everything, I think. Yep, that looks good. Perfect. All right. So no more questions. I think we answered everything. That's great. Kunal, Maciej, thank you very much for a great presentation, answering everything. And honestly, I've looked on your chart also just before, and I saw that your stock price has crossed from the bottom to the upward trend, the 50-day average, which is very, very positive and normally a nice buy signal. So hopefully today will be something like notable, really, that the stock is moving upwards again. But it really looks like a great company, great technology, and please keep us posted. And take care. Thank you very much for a great presentation. Thank you, Kunal. Thank you, Maciej.
Thank you. Thanks.
Thank you. Yeah, ladies and gentlemen, that was LI Metal with Maciej Jastrzebski, the CEO of the company, and Kunal Phalpher, the president. And yeah, I think a very compelling story, very interesting. It was not a mine, of course. This is really high tech, and maybe that's one of the reasons why the stock price went slowly but surely downwards. But I think it's a great opportunity, because I don't want to buy the stock at 150. I want to get it at 32, 34 cents, which is much, much better, because we want to buy low and then sell high, of course. And this is what we are here for, making some money. Check out the company. You find the presentation on our website, resource-capital.ch, under the section of LI Metal, of course. If you have any questions, please feel free to come back to Maciej, Kunal, or myself. I wish you all the best. Thank you very much for listening today and joining us. And also thanks for your questions. And the replay of this presentation will be available tomorrow on commoditytv.com. Thanks, and bye-bye, and good night. Thanks. Cheers. Bye-bye.
Thank you.
Thank you.